Investors are debating at the moment whether we're witnessing a classic speculative bubble in the tech sector. AI startups are reported to be gobbling up a huge share of venture capital, with over half of global funding, up to 65% in some regions, just focused on this one sector. And perhaps surprisingly, more than 95% of these investments were reported by Bloomberg to be yet to yield any meaningful return. Meanwhile, the hype has concentrated value in a handful of mega cap tech titans that now dominate the S&P 500, the NASDAQ. It's reminiscent of the dot-com era's inflated valuations. Even OpenAI's CEO has warned about us being overexcited about AI. So he was likening today's fervor to 1990s internet mania. So what's interesting is this conversation is going on at the same time as we approach September, which is the weakest month of the year for the NASDAQ 100. And on average, over the last 25 years, the NASDAQ has lost 2.20%. And also notice some of these big drops. Going back to the dot-com era, wow, look at those falls, 15, 20%. So just to be aware, we're now coming into September. Even though we can take a look at the NASDAQ and we are right up at these highs, there's a definite risk that we could see some selling in September if this AI hype ends up resulting in significant sell-offs on concerns about the market that it's not actually going to equate to the bottom line, and it's sucking in all this capital that is not going to see a significant return. So just to be aware, September, weakest month of the year for the NASDAQ 100. Be careful around these highs and watch out for potential selling if the seasonality plays out this year. There's an average fall of 2% with some outsized losses in 2000, 2001, 15, 20%. So just to put that into perspective, if the NASDAQ lost 15, 20%, that would be a move all the way down to these lows here. A significant drop. So, watch out is the message from Seasonality, and watch out is the message from some analysts concerned about all the hype around AI.